Hello guys, welcome to today's session in Concept. Now till now we have discussed many BTST strategy, buy today sell tomorrow, in which we have discussed like how you can pretend if there will be a gap up or gap down in the market tomorrow, right? So if you haven't seen that video, you can search it in Concept application. Okay. Now today we will be learning about how you can trade after that gap up or gap down, right? Now before starting the video, if you are new here, you can go in the description. There is a link below. With the help of that, you can download and install the Concept web application. After successful registration, you will get 25 free tools here that you can use for your trading. Okay. Now also in learn section, we have video library. So we have made multiple videos on Pro Plus tools as well as on strategies. So in your meantime, you can go through these videos. They are available in multiple languages. Okay, for example, English, Hindi, Gujarati, Marathi and Tamil. Okay, so you can choose your preference as well, right? Now in the profile section, we have our support, right? So you will get our contact number as well as email ID. So if at any time you are having any kinds of doubts or query, so you can reach out to us and we will be there to sort your queries out. Okay, so let's get back to today's session, that is how you can trade after there is a gap up or gap down in the market. Right now, before that, I'll clear some basic things with you. Okay, so first of all, what is a gap, right? And the types of gap, right? We will discuss that. Now, for example, if there is a market and the market closed here, okay, so this is the candle and this was it closing, its closing, right? And this was its opening price. Okay, now at any point of time, if it is a running market or if it is the end of the market, the next candle will start from here, okay, or it can start from here, right? So this is the opening of the very next candle, right? This is the opening of the very next candle, and in this side, this will be the opening, right? So the gap in your premium or in your price, that is considered as a gap in your premium, right? You can say, so your market jump directly from this level, from the closing of the previous to the opening of the next candle. Similarly, in the bearish side also, if there is a closing at this one, for example, there was a closing, okay, closing of the candle at this point of time, okay, so your market or your premium jumped directly from this point to this point, okay, so now a gap is created here, and that is how you can also trade BTST. But what if it has already been done? How we can trade after the gap up or gap down, right? So today we will be learning that. Okay, now there are four types of gap, if I'll tell you. So there are four types of gap. Okay, so we will be learning about types now. Okay, now the first one is the common gap. Okay, the first one is common gap. Okay, and how it will look like, for example, there is a candle. Okay, so it can be green or red. Okay, now after the closing of this candle, there is a candle, okay, that opened, gapped up, okay, and then it closed there, and the very next candle, it again formed here. Okay, so now there is a gap, okay, and there is a gap also, right? Now what it generally indicates, it indicates there was a fear in the market, okay, or because of any reason, because of some news, because of aggressive buying, okay, your price directly jumped here from this closing to this open, right? So for example, this candle closed at 240, right? So the next candle opened at 260. So now there is a 20-point gap up, right? Similarly, so it opened at 260 and it closed at 270, right? And your next candle, it opened at 250 and it closed at 230, right? So again, there is a gap of 20 points. Okay, so when this scenario will happen in the market, that is your common gap, and the common gap generally indicates a bearish movement, right? There was the market, so for suppose this is the green candle. After this green candle, there was some aggressive buying, okay, there was some interest in the market, so your premium jumped directly 20 points above from 240 to 260, okay, then it closed at 270, but then that interest was for a very shorter period, and again your price jumped backward, and then there is a negative movement. So whenever there will be this condition, a common gap up, Okay, it is known as a common gap up. So you will analyze like there will be a downtrend. Okay, so it generally reflects you the reversal. Okay, so whenever there is a common gap up, so then you will go for the reversal. Okay, you can also confirm it if there is a support level, sorry, resistance level, okay, or if there is a supply zone. So you can also confirm your common gap up with a support or resistance, right? It can also be formed in the negative direction. For example, like this, if there is a candle and then there is a common gap, okay, and then there is another candle. So there are two gaps now. Okay, so it is for the bullish one, the market came here, okay, and then it will reverse itself, and this one is for the bearish one. Okay, your market goes up and then from the common gap up it will come down, right? So this is the first thing, right? Okay, now let's go to the second thing. Okay, second, that is a runaway gap up, runaway gap. Okay, now runaway gap, for example, your market is trending like this. Okay, there is a candle and then there is again a candle. Okay, it doesn't matter if these are green or red, right? Now your market is in continuation and you can suppose it is a 15-minute or 5-minute candle and you are trading in intraday, right? But now after some time there is a candle that jumped high, okay, like this, and now there is a gap, right? So it is called the runaway gap when your market is running and generally you see suddenly there is a gap in the market. Okay, so this is the runaway gap. Now how you can trade with the runaway gap? So the runaway gap shows you a strong sentiments in the market in the continuous direction, and that is why it is also known as the continuous gap. It is also known as the continuous gap, right? So if there is a trending market, if it is a bullish side or it can be in the bearish side like this, right? Then after some time you see suddenly there is a gap down, okay, and your next candle it opened 20, 30, 40 points below from the current market, right? In a running market, I'm talking about running market, not like the market closed here and then the very next day opened here. I'm talking about the intraday, right? So these candles were forming, right? And suddenly the very next candle it opened like 40 points above, right? 40 points above. So this is called the runaway, right? The continuous direction. So it shows a strong sentiments in the continuous direction. So if the market is in bullish direction and you see this gap up, so you will trade in the bullish side. You can buy a call or you can buy your stock, right? Or you can sell your put as well, right? Similarly, if your market is in negative direction and you see a gap down in the running market, so that indicates that there will be the continuous movement, okay, in the same direction, right? So it shows you strong sentiments in the market, right? So that was our second type of gap, right? Let's talk about the third one. Okay, let's talk about the third one here. Okay, third one is called the exhaustion gap. Exhaustion gap. Okay, exhaustion gap. Now exhaustion gap is the very common type of gap, okay, and in which what happens, for example, your market was here, okay, and at the closing of the market, for example at 3:30 your market closed here, okay, and the very next day your market can be opening here or your market can be opening here, okay, either or, right? So this kind of market in which we do the BTST, right, when the market opens next day gap up or gap down, so this is the general gap up that is known as the exhaustion gap. Okay, now how you can trade with the exhaustion gap? So there is a trick, okay, how you can trade with it. For suppose your market was going like this and then there is a gap up in the market. Okay, so let me remove this candle and then there is a gap up in the market. So how you can trade this? So for example, this was the gap that has been created, right? With the very next day your candle opened here. Now this is called the gap and this gap is your exhaustion gap, right? Now your market will always come back to fill this gap and that is known as the gap filling. That is known as the gap filling. Okay, gap filling, right? So this is the market where there was no activity or this was the market where there could be somebody who are interested, right? So the market will always retrace back and come to this level where there was a gap, right? It can happen on the very same day, it can happen after 1 day, it can happen after 2 day, 3 day, but generally the market comes back, okay, to retrace this gap, right? And whenever your market will come back, so at any point of time, if this gap will be broken down, so then you can trade in the negative direction. And if your candle sustains above it, so you can trade it as your support and new order will be placed here, so then it can again go in the upward direction, right? So whenever there will be an exhaustion gap, right, so you will be waiting for the gap filling, you will be waiting for market to retrace your gap again, right? And if your gap will be broken down, so you can treat it as your zone. So whenever your gap will be broken down, market can go in the negative direction. And if the candle or market sustains above your gap, that is generally we are referring this gap as a zone, so then it can again move in the reversal direction or in the opposite direction, right? I hope it is clear, right? Okay, now after this, the fourth type of gap, let's discuss that one also. Okay, that is the last one. So the fourth kind of gap, the fourth one is called the breakaway. The fourth one is called the breakaway gap. Okay, breakaway gap. Now generally what happens, for example, your market was going like this, these are the candles, can be red, can be green, we don't care. Okay, now after this there was a very strong resistance that you have been waiting for a long time that the market can break it, right? But suddenly you were waiting for a candle to break it like this, but what happened? Your candle did not break it like this, but it opened above it, right? It opened above it, right? So what will happen? How you can do trade with this? So you can wait for your market to come back to this level to retest this, okay, retest this resistance, right? And then again it can go in the same direction. So this breakaway gap also signifies a strong sentiments in the market. The resistance that you have been waiting for to break out, it has been broken out by a very good strong sentiments in the market. So it generally suggests you a good continuous direction that you can trade in the continuous direction in the market, right? Similarly, if there are some candles, okay, in the bearish direction, and then there is a very strong support, and after some time your market just opened here, okay, opened here, or the very next candle it just formed here, okay, without breaking it, it just opened below it, and this is your very strong support. Okay, now what it suggests? It suggests a continuous movement in the negative direction. Now this continuous movement can be continuously or it can be after a retest also, right? But just wait for retest whenever there is a breakaway gap up, right? So I hope these four terms are clear to you. Okay, the first one is the common gap. Okay, then there is a exhaustion, then there is a breakaway gap. Okay, breakaway gap is also there. Okay, and the runaway gap. So I hope these four terms are clear to you, right? Okay, now let's see if we are getting any indication in the chart. So we will apply the chart here. Okay, and I'm opening, so a chart has already been opened here, so let's see if we can analyze something in this chart, right? Okay, so let me put the time frame of 1 hour here, right? And let's zoom it out a little. Okay, I can see here this was the market, and at 3:15 you can see your market closed at this point, right? And the closing was approximately 13,358, right? The very next day your market opened at 13,325. So there is a gap down in the market, right? But as you can see, as I have told you, this is the exhaustion gap, right? So the market just opened here, so there is a gap, this is the gap, right? Now as I have told you, whenever there is exhaustion gap, so the market always come for the gap filling, right? So you can see this was the gap, right? This was the gap, and your market came down, and again it came up to fill this gap, and it broken out successfully, and then your market goes in the upward direction. So that is how you can trade a exhaustion gap, right? So I got a reading here. Now let's find some other gap, if I can find it in this chart, right? Okay, so now there is another one, you can see here. So another one, and let's see what is the timing of that gap is. So this is again 3:15, so it will be my exhaustion gap. You can see, let me zoom out the chart a little. Okay, you can see it here. So there was a gap, so my market closed here, and then the very next day the market opened here, so there is a very good gap in the market. Okay, so if I'll extend it a little ahead, okay, so this was the gap, right? Now I can see my market went upward, but again it came back for the gap filling, and after, so I will treat it as my zone, right? And my market broke it out successfully, and then you can see a good downward movement for some time, right? So this is how you can trade your gaps. Okay, I just got a exhaustion gap here, but you can try your chart and you will find some multiple gaps that I have already talked about, right? So I hope guys ये जो concept है clear हो गया होगा, ठीक है? अगर आपको पसंद आए, you can like the video. You can also comment down your views in the comment section. If you are new here, you can subscribe the channel. Thank you so much guys. This is your trainer Ankit Singh Rawat. Have a very great day.